Traders, Cousin Vinny coming to you from theclosingprint.com, March the 7th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, of course, which started a major reversal on Friday thanks to short covering due to the large percentage of puts that rolled off the books and expired on Friday. We saw reversals, hammers, and significant short covering with mixed results in the big cap tech and growth stocks that we follow, as you can see. Some of the biggest changes were in the Forex market. US dollar is showing strength. It's breaking out of a descending channel. In addition to commodities, with copper continuing to outperform gold, Brent crude oil giving us a bullish signal for U.S. equity markets as it continues to rise, and sectors continue to improve. We have a pretty extensive list of stocks that are set up looking good going into the week, from the IBD 50, stocks showing relative strength, as well as stocks with rising profit estimates in green, and stocks from the Blue Dot scan in cyan. Dow Industrials show about 2/3 of the stocks set up and ready to bounce and follow through, hopefully, from Friday's reversal, and stocks that have shown up on a scan that had all of the attributes and criteria that we look for: RSI rising above 50, MACD crossing or about to cross, stochastic turning from oversold, and price above the 9 and 21 day going into this week of trading. In addition, we have Bukowski's CPI signal bullish at 87%, with 8 bearish patterns, 39 bullish patterns, and 190 patterns waiting for breakout. That leaves us this week with 12 bullish indicators, 6 neutral indicators, and 2 bearish to start the week. We're short-term neutral to more bullish. We need to see how price action resolves on Monday. We need confirmation, so we need to see a bullish follow-through day to confirm that this is more than just a short covering reversal and bounce at the recent lows. The Dow Jones Industrials gained the most on the week, closing up 1.82%. It's also the fewest number of stocks, with only 30 components in the index. Most significant thing is that we're still on a bullish cross. The 50-day and the 200-day are still climbing. So there would need to be a significant change in these moving averages, with price action potentially flattening out. We had thoughts that this could be a head and shoulders top, so that still needs to be disproven, with about 2/3 of the Dow Industrials showing bullish setups for the week, provided we have a bullish follow-through on Monday. The S&P 500 had quite a day, gaining about 120 plus handles after falling about 1% from the opening bell to the 11:30 lows. Going into Friday, we knew that a very large percentage of the Qs and S&P 500, as well as the spiders options, were expiring, that if we did see a bounce, we could see a short covering rally with a very large strike at 38.50. As we continued to rise, more puts were being closed, which added to the shorts covering, creating a cycle feeding on itself as we close near the highs of the session. In addition, we have the number of stocks trading above their 50-day moving average rising again after fading most of the last 2 weeks, and the number of stocks trading above their 200-period moving average is still in the red zone. So more important than ever, we need to see confirmation with a follow-through back above the 50-day moving average and a continuation. Otherwise, we could be at risk for failure, just given the number of stocks that are trading above their 200-day and 50-day moving averages. Removing the weight of those 10 stocks that comprise more than 25% of the weighting of the S&P 500 gives us this equal weight index, which we could see bounced significantly on Friday, holding this area for the past 3 weeks, which is telling us that those growth stocks that have been sold are what is holding the markets back. Removing that weight shows that we have relative strength. We do need to see CCI turn up. That happened on Friday. I was hoping for a oversold condition before rising. That would make the signal a bit more effective. Thus, we need to see confirmation on Monday. Adding the mid-cap 400 and small-cap 600 gives us the S&P composite 1500 stocks. We can clearly see that the green line is above the red line. There's no fluctuation or change in direction, and histogram continues to build green histogram bars. We did bounce with a blue elder stick off the lower Bollinger Band, so we need to see a move back above the 21-day. And we need to see breadth in these three components continue to move higher. In addition, if we look at the NASDAQ 100 or the Qs, we had quite the sell-off, with the number of stocks trading above their 50-day moving average reaching a low around 15% on Thursday, reversing on Friday, and as previously shown, that led to rallies when we saw these reversals in the number of stocks trading above their 50-day. Still, much of the rally was due to puts rolling off the books expiring on Friday. The 310 strike was pretty large. Again, another reason why we need to watch for confirmation on Monday. Small caps also need to see a consolidation, moving in a descending pattern over the last 2 weeks. We did manage to find buyers on Thursday and Friday, pushing back above the 50-day moving average, producing a hammer on Friday at the 236 Fibonacci level. Volume was well above average, and momentum indicators need to turn. RSI needs to get back above 50. If we go to an even larger index, the New York Stock Exchange, 2,700 stocks, give or take, we did see reason to be more hopeful after that rally off the lows, leaving the daily time frame still above the zero line, with the New York Stock Exchange advanced decline attempting to hold these levels. We need to see a higher high in addition to a follow-through on Monday. And taken with the Wilshire 5000, presently about 3,700 stocks, an even broader measure of market participation. For the weekly time frame, RSI still remains above 50. Price actions consolidating at the moving averages. Volume did increase again last week. However, the cycle is still somewhat bearish. We want to see this turn and price action confirmed by following through on Monday and Tuesday to start the week. Vixx, once again, is the key for the week. Despite the morning drawdown, the Vixx never broke above 30. We're still on a green signal, telling us to look for higher lows and higher highs on this 60-minute time frame. And once the drawdown early Friday paused, volatility was crushed. We moved from the 30 level down to 2450 as that reflexive feedback kicked in. The markets crushed puts, which led dealers to buy futures, which further crushed the puts, and that vicious cycle flushed Vixx back to the 2450 zone. So if we're to see continuation this week, we'd also expect to see Vixx lower to start the day. The bond stock ratio in the lower panel continues to move lower. That's telling you that equities are favored over bonds. Yields continue to rise, with the yield curve steepening, the 30, the 20, and the 10. are at highs and continue to move higher, with the 2-year and the 3-month still at the lows, and with the 10-year rising back to the levels that we saw in February last year when COVID hit. Many are thinking that the rising 10-year is bad for equities. However, the chart that Brian Dietrich put together shows that rates rising over many years in the past saw the S&P 500 rising except for 3 occasions in the past, with the overall or median gain with the 10-year rising of 15%, with an average yield of 2.4%. That said, I did add some TLT, the 20-year Treasury, to my portfolio of retirement account fixed assets, as it looks like we're trying to hold the lows here. I'll scale in if we continue to move off of these lows back towards the overhead 50-day and 200-day moving averages. If we should fail, I'm near enough to the recent lows that I can stop out, and assuming that we will rise in the short term. I also added some US dollars as we see this descending channel breakout last week, added on Thursday. Was going to do something on Friday but decided not to. I'll wait until Monday if this continues. We've got the 200-day moving average overhead, with volume by price resistance also showing up in the same zone. This is UUP, the Invesco Deutsche Bank US Dollar Index Bullish Fund. This is what I bought on Thursday. Looking for a move back up into this zone in the short term. And with regard to commodities, we continue to see copper outperforming gold. As US dollar moves higher, gold should move lower. It'll take fewer dollars to buy the same amount of gold. As copper outperforms, this is telling you as a leading economic indicator to assume that the economies are improving based on supply and demand of this particular base metal used in construction, coupled with the strength in Brent crude and West Texas crude continuing along the bullish cycle, higher highs and higher lows. We're starting to get embedded RSI showing relative strength. I'm thinking we're going to run into this level between 72 and 75 and maybe consolidate in this zone. This is still bullish for equities as crude oil has a positive correlation to the equity market. With the sum total of commodities in the CRB index showing a potential for a breakout over the next few months. If that were to occur, that would confirm our suspicions that global economies are picking up the pace and becoming more bullish, with the lockdowns in our rearview mirror and vaccines becoming more prevalent and economies reopening, with the latter being assumptions that we need to confirm over the coming weeks. Sector strength remains with energy, financials, communications. We see healthcare moving into the improving quadrant, real estate improving. Technology looks like it's trying to reverse, with many sectors forming hammers and bullish reversals off of key moving averages. Last week, transports looked pretty good. Materials, communications, energy, financials look strongest, in addition to the industrials, and retail regaining some strength. We're also watching for biotech, XBI, IBB, and LABU Particularly interested on a follow-through on this bounce off the 200-day moving average with RSI oversold, looking for a push higher. Stochastics turning, giving us a nice bullish signal. So we just want to see confirmation on Monday and Tuesday. Together with the ratio between consumer discretionary and consumer staples, telling us to stick with the trend, emphasizing we look nothing like February. Here are the IBD 50 candidates for the week. Semiconductors, nice little bounce, looking for a follow through and a move back above the 50-day moving average. Chegg, looking for a follow through with a hammer on Friday, looking for continuation and for RSI to turn back up. Stochastics is oversold. In the retail group, Crocs looks good, bounced at the 50-day, looking for a move back above the 9 and 21-day. Continue the trend, nice, smooth, and clean looking chart. RSI needs to get back above 50, and Stochastic and MACD need to turn. Avery Dennison bouncing at the 21-day, nice hanging man candle, volume increasing, Stochastics trying to turn. Many of these stocks holding the 9 and 21-day, buyers stepping up with MACD continuing higher, Stochastics needs to turn, ATR is rising. On this particular candidate, Avient Corporation, AVNT. Century Communities looking good. Remember, real estate is a very strong sector. CSOD bouncing at the 50-day. We have Stochastics oversold, looking for that to turn. First thing Monday, Tuesday. Wait until Monday or Tuesday for confirmation. A lot of these stocks still need to see a bullish follow-through day. The builders saw some very bullish action last week as well. Copper continues to outperform gold. We're looking for this follow-through, Stochastics to turn, and a nice little oversold condition with MACD turning and RSI back above 50. Nice little setup here for the week ahead. John Deere and Caterpillar both pull back to the 21-day, still in this bullish trend. RSI is above 50. Looking for volume to pick up again and Stochastics to turn higher. Note ATR continues to ramp in a bullish direction. Dropbox looking very strong, back above the 50-day, 9 and 21-day. RSI is above 50. Stochastics is turning. MACD is about to cross, volume increasing. Nice little setup on Dropbox. Floor and Decor in the construction related names. Looking for a follow through. Nice bounce on Friday. Stochastics oversold and turning. Fortinet at the 9 and 21-day. Need to see that bullish follow through day. RSI is above 50. Stochastic will turn along with MACD. Volume should increase. Otherwise, we'll move on if it does not increase. Generac, nice hammer, looking for a follow through. Hillenbrand breaking out, 52-week highs, showing relative strength. Whole Logic, buyer stepping up at the 200-day, RSI is turning, it's still below 50. Volume increasing above average. MACD and Stochastics both look ready to turn. ATR is rising. Ingersoll Rand breaking out, 52-week highs on above average volume. MACD is above its signal line and Stochastics is rising along with ATR. Ligand Pharmaceuticals again looking for a higher low to hold the 50-day. This held on by the skin of its teeth on Friday. Managed to stick with this one. Need to see a push back above the 9 and 21-day. Stochastics and MACD turn higher. We'd like to see more volume. MDC Holdings looking for a breakout. Nvidia at the 200-day, watching for buyers to show up on Monday. Looking for more volume. MACD and Stochastics turning would be a prerequisite as well. With many stocks showing hammers below the 50-day, still need to prove themselves by getting back above the key moving averages. Stochastics and MACD turn. Polaris looking for a follow through. Nice little breakout showing relative strength on Friday. Volume increasing, MACD has crossed and Stochastics is rising along with ATR. Semiconductors like Skyworks, nice action on Friday. Buyers stepping up. Could just be shorts. Just remember, we need to see a follow through on Monday and Tuesday. ATR picked up as well. Stochastics looks like it's about to turn. Look for a follow through day or two that pushes us back above the 9 and 21 day to be safer. Southern Copper looking for a bounce off the 50-day, volume to increase. Stochastics and MACD need to turn as a function of price. Steel Dynamics, another materials and industrial name. Nice breakout, 52-week highs. Looking for follow through in stocks like Alcoa Aluminum, U.S. Steel, U.S. Concrete, among others. T. Rowe Price from the Financial Services Group, nice bullish trend, looking for a follow through with volume increasing, stochastics turning MACD higher, and average true range climbing. Taiwan Semiconductor looking for a follow through day as a start with RSI rising, volume increasing, MACD and stochastics ready to turn. Watch for the confirmation first to be safer. Tempur Sealy riding the housing trend, looking for a follow through. Vip Shops holding a Chinese stock with a nice bullish trend, looking for a follow through here as well. Williams of Sonoma, high quality retail names like Ralph Lauren, Estee Lauder, Canada Goose, looking for a follow through in these names. A confirmation of risk appetite. Stocks like Yeti below the 50-day moving average, not my cup of tea per se. You know, I like it better when price action is above the 9 and 21 day, RSI is above 50. But many of these stocks may see some bargain hunting. If we have a follow through, it would be more of a confirmation for some of the other retail names that we're watching. Looking for a push back above the 9 and 21 day. MACD to cross, move higher, volume pick up, and stochastic rise as a way of confirming some of the other retail names we might be interested in. We're also looking at stocks that have rising profit estimates like 360 Digitech, bouncing at the 50-day moving average, looking for stochastics to turn. Brunswick Corp looking for a follow through. Sporting Equipment. Builder's First Source from previous watch lists in the construction industry, looking for this bounce at the 50-day to follow through again on Monday, Tuesday. RSI is above 50, volume increasing on Friday. Stochastics and MACD should turn. ATR continues rising. Century Communities and the real estate industry group looking for a bounce and a follow through. Buyers Thursday, Friday on these wicks. Volume picking up. Watch for stochastics and MACD as well as price action to follow through. Evercore in a nice bullish trend. RSI above 50, volume increasing. Generac Holdings looking for this bounce to get back above the 9 and 21 day. Volume to pick up. Glacier Bank Corp looking for a push higher. Banks look really strong the last few weeks. Looking for that trend to resume. Again, with these breakouts, these stocks are all showing rising profit estimates. Hillenbrand looking for continuation of the trend. RSI and MACD pushing higher and bullish. Hilltop Holdings trending. Jefferies, another financial services group name, bullish, looking for a follow through. SVB Financial Group, same story here, looking for a follow through. Sleep Number like Tempur-Pedic, Sealy, looking for a follow through. Bullish trend. Remember the industry group I showed you, autos, very strong. AutoNation in that group, breaking out to 52-week highs. A lot of strength. Look at the volume for the past 3 trading days. MACD and stochastics rising. I would look for a flag now. I wouldn't chase it up here. Look for a little pullback, but it does look strong. Looks like the trend will continue. Fox from previous watch lists also wrote a blog post about this one last week. Following through, Contour Brands, nice base breakout. It's on about day 3. Looking for a follow through, volume picking up, showing institutions have been buying. Louisiana Pacific riding the trend in inflation in wood products. Maztec showing relative strength following through last week. Matador, another one of the energy names, oil and gas, looking for a follow through. Mattel showing up on the relative strength list as well. Pnc Bank looks like it's going to break out this week along with Citigroup, JP Morgan, Goldman Sachs, Morgan Stanley, Wells Fargo, Bank of America, all of them looking very strong. Parker Hannifin looking for the breakout, relative strength. Snap-on Tools looking for a follow-through, nice bullish trend. Relative strength, very obvious. When the markets have been pulling back for 3 weeks, this one continues higher. Maybe we get another little dip to the 9 EMA. Looks like that keeps getting bought. And Zion's Bank Corp looking for a follow through. I also ran a scan over the weekend and produced a blog post that you can check out. Has a listing of stocks. Just click on the links with all of these stocks showing the same criteria. Stochastics turning from oversold, MACD about to cross or crossing, RSI rising above 50, volume increasing, and looking for a follow through. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, March the 7th, 2021. Look for the watch list to be out later tonight around 11:30, 12 o'clock on the East Coast, 8:30, 9 o'clock on the West Coast. I need to get outside and enjoy the rest of the day. It's beautiful outside in Myrtle Beach. So I hope this helps. Take care, and I'll talk to you soon.